Good evening. It is time for today's Tax Talk. I'm your host. I'm attorney Stephen Leahy, and today is Wednesday, October 13th, year of our Lord 2021. We're going to talk about Biden's American Families Plan. Love the title. Not so much what's in it, though. Let's find out what's in it. Okay, welcome to today's Tax Talk. As I said, today we're going to talk about Joe Biden's family's tax plan. I got to move around a little bit because I think I'm being hidden over here. There we go. A little bit better, a little worse. I don't know. Let me figure that out. I'll figure that out. So today, again, America's Families Plan. I love the name. Always love the names of all the legislation that comes out. Many times the name has nothing to do with what's inside. I think that's exactly what's going on here. He tells us that this is about helping American families. I have to disagree. I think it's doing just the opposite. But that's the way they couch the plan. We've talked about the three areas that are really hidden in this reconciliation plan and the infrastructure bill that's being considered. We know the infrastructure bill is about $1.2 trillion. I think it's even more than that. Might go up to $1.9 trillion. And then the reconciliation bill is $3.5 trillion. That's on top of the $5 trillion that's in our budget already this year. And I've heard many who support this bill say, well, it's the 3.5 trillion, and now it's like 5 trillion, 5.5 trillion, or whatever it is. It's in the $5 trillion mark. Oh, but it's that much of that's over 10 years, so it's really not that much money. And we've also heard that it's paid for. So don't worry about it. It's paid. It doesn't cost anything. It's not that it's paid for. It doesn't cost anything. Or as Nancy Pelosi said, but here's my other hand. Zero. Costs zero. Doesn't cost anything. I don't think $5 trillion could be zero. And I think what they're trying to say is that it's paid for. It's not really paid for, even of the $5 trillion. I don't think that there's one of the ways that they're talking about paying for it is through the IRS and the tax bill. And that's really where I'm focused on. We talked about the bank statements, and that's in here. We're going to review that. We talked about the crypto exchanges, what's in there. That's in there. We talked about the global tax. That's also in there. We talked about the proposal for this, the trial program to start tracking all of our cars so they can charge us by the mile in for the highways. That's in there. And there's other things in there that we're going to. So let's find out what's in there, at least some of it, because I can tell you that the summaries of what's in there, and we're going to look at the administration's own words that are out there, what they've published to tell us what's in this plan. Again, doesn't really mean that's what's in it. That's what they're telling us. It hasn't passed, and you don't. Again, I'm going to use Nancy Pelosi's words against her or for her. We have to pass the bill to find out what's in it. We won't know what's in it till it passes, and then they start bringing it up to us and say, "Oh, here's what's in the bill. Oh, here's what's in here's what the law is. Here's what the new law is." And it's not a small change. What's going on? It's a robust change in the way that we tax people, in the way that we collect taxes, the way we spend taxes, the way we target people, who's targeted, how much money they give away. This is all it's a fundamental change of America as I see it. But so let's go into it. So I got to tell every day I have these These are the three plans I have up here. Oh, it's over here. I have up here the three. It's the American Rescue Plan, the American Jobs Plan, and the American Families Plan. All three of these make up much of the reconciliation bill and the infrastructure bill that we talked about. The American Families Plan is what we're going to talk about today. I get every day I get the alerts of anytime someone's talking about the IRS, and for many, so I get most articles that have been written. Usually before we go on air, I will Google or DuckDuckGo the IRS to find out if there's any new articles today. And so today, I was kind of surprised that there was really only one entry for IRS, and the entry. So let me go back and tell you what that is, though. So let's talk about this. So the entry was this tweet, and this was the only thing for the IRS today, was this tweet from Senator Bill Cassidy, and his tweet says, "The IRS does not have the right to spy on American bank accounts." Well, technically, he's right. There is, well, and I mentioned this a lot in this show. The Financial Privacy Act is the law of the land today, and so the IRS, because of the Financial Privacy Act, does not have the right to go into our bank accounts and look at our records without a subpoena or a warrant to do so. And when people tell you, well, the IRS needs to do this for collection purposes, they already have the right, but they need probable cause, right? They have to have some reason to go into our bank accounts. And so this was and this is what got, many of the responses here was, hey, we need to do this to go after the wealthy because they're not paying their fair share. And I'm going to go back on this, and I've talked about it a lot on this show and anywhere else who will listen to me, about the three boogeymen that they're using to target to gain support for these measures. The wealthy, right? And that, we've seen their tax returns illegally leaked. We've seen, story after story how the wealthy don't pay taxes, or how wealthy they are, or and so that's what they're telling us here. Well, we need to go after the wealthy, and to go after the wealthy, we have to go after their bank accounts. And so we really need to go after everybody's bank accounts. And of course, they don't have to go after everybody's bank accounts, right? They could target it better. But I've also heard the excuse, the wealthy will then just cut up their money and put it in a bunch of to avoid the scrutiny. And of course, I don't think that our wealthy are out there trying to break the law every day as they try to tell us they are. But that seems to be much of the opposition to this. Well, the wealthy aren't paying enough, and we need to get their information. But this tweet and some of the responses led me to this, and Cassie Owens, and PolitiFact, the Biden administration is attempting to empower the IRS to monitor every single withdrawal. And I've seen this this response, every single. Okay, well, that's nice. What happened? Not sure what happened there. Anyway, it led me to that tweet from Cassie Owens and the not sure what happened there. And her tweet, and the PolitiFact, who said it's mostly false, right? That it really isn't happening that way, and so it's, while she's partially right, she's mostly false, because they're not really targeting everybody in every single transaction. Actually, what they're calling for, and we don't know what the law is, again, because it hasn't really yet passed, and so is it? Are they going to say just the balance at the end of the year? and how much has gone through the whole year. Does that mean at the end of the year, if I took out all my money, they're only going to report the end? Well, no. It talks about inflows and outflows. And I believe that the law is going to while they won't be reported automatically, it still will give them the authority to go after anybody's bank account without a subpoena or warrant. Just say, hey, well, this Mr. Smith, let's get his stuff. Let's look at what he has. And I think then the banks have to then just hand it over, because the Financial Privacy Act will be overturned, and that won't be an issue any longer. And so that should be a concern for all of us. And so in that PolitiFact, they said, well, here's how we got our information. And one of the things they used as a source was this general explanations of administration's fiscal year 2022 revenue proposals. And so I went and got it, and I read it. And there's lots of things in here that are fairly surprising to me. And so let's review a little bit about what this is. It's pretty. I'm not going to go through all of it, because it's like every other governmental publication. Much of it is irrelevant. And dry, and but that's the way it always is. It's much of the publications. Let me see if it came up yet. It did not. This is a problem I've never had before. And it bothers me. Anyway, so let's look at some of this. This is the Treasury Department, Joe Biden's Treasury Department. This how long it is. It just goes on and on and on. But let's just read the reform corporate taxation, raise the corporate income tax rate to 28%, right? And so this is the current law. Income of business entity can be subject to federal income tax in a manner that varies depending upon the classification of the entity. Most small businesses are owned by individuals and taxed as pass-through entities. This is exactly true, meaning that their income is passed through to the owners, who are taxed under the individual income tax system. Most large businesses, including substantially all publicly traded businesses, are classified as C corporations, because these corporations are subject to rules of Subchapter C of the Chapter 1 of the Internal Revenue Service and pay an entity level income tax. What they're not telling you is that when these C corporations are owned by shareholders, and the shareholders receive dividends from the corporation, and the shareholders who receive dividends, that's income, and they pay a tax on that. And when the corporation is taxed on the income, and then it's taxed again, it's really double taxed. So even if they avoided some tax, and that's not a very good, I shouldn't say avoid, we're not eligible to pay tax on. The government's still going to get paid taxes on all the dividends that are paid out. And that's just the way it works. C corporations determine their taxable income credits and tax according to Code C. Reasons for the change: raising the corporate income tax rate is an administratively simple way to raise revenue, and we found over the years it's not a way to raise revenue. Corporations find ways around it, and here's the thing: we know that the politicians get their money from corporations, and so they'll put other avenues to avoid the tax, to be liable for the tax. So they're not avoiding taxes that they're legally obligated to pay. There's many ways that they reduce their income tax or the taxable amount of money that they do receive. Revise the global minimum tax regime. Well, we talked about this, and this is what we talked about on Monday, and this was what's in there, right? The global tax minimum. So I'm not going to review that again, because I did that on Monday. And they go through a big explanation why this is necessary. Let's see the next one. Limitations on the ability of domestic corporations to expatriate. So to go to do business in foreign countries. Okay. Let's see what else is on here. These are, again, I had a page that was up there, but it's reform taxation of foreign fossil fuel income. So they're always concerned about the Green New Deal. It's all about the Green New Deal. All of this reasons for a change, because we need to. I'm not going to spend a lot of time on that either, because I'm trying to get down this. Repeal the deduction for foreign derived intangibles. Very complicated. Based erosion. But this is how detailed they get about changing every little nuance of our tax law in order to make it harder to function. I think most of these, most government entities and most people in government view the money as theirs, and they allow us to keep some. And so they look at the tax code as a way to carve out some for the people who earn it. And I look at the tax code as a way to take it away from those who earn it. And that's the difference, I think, philosophically against from some people, one side or the other. Restrict deductions on the excessive interest of members of financial reporting groups. I'm trying to get to this. Just goes on and on and on. Impose a 15% minimum tax on book earnings of large corporations. Okay, so what they're saying here, the corporations will publish an amount of their profit, but that's not the taxable profit, because there's many things in the tax code that allows them to reduce their taxable profit and then don't pay tax on it because it's in the tax code. And so what this proposal will do is say, okay, even though it's not in the tax code, we're still going to make you pay 15% on that amount that you say that you made. And people say, well, they say they made that, but that's not taxable money, right? Everybody has taxable income, and then you have your gross income, and then you have taxable income. It's different. There's a lower amount that's taxable than there is gross. And that's the same thing with corporations. So the IRS, so one way that the IRS can say it about individuals is say, we're not going to tax you on taxable income anymore. We're going to tax you on gross, everything that you make. And so we're just going to set a minimum on that. That's what you got to pay. And of course that's like a total rewrite of our tax laws. And again, you have to be careful the way it is couched in the language that they use. Support housing and infrastructure. Okay, so that's just paying more. This is the infrastructure bill. Homes investment tax credit, so giving money away to some people. So again, this is so compound. I'm trying to find the. Let's see if we can get to. Thanks. So I'm trying to get to just cut to the chase here, Steve. Since I had to go around in a different way to. Okay. Well, we'll have to do it. Okay. We'll have to do it again on another day. Maybe tomorrow I'll have to pull up these, because there's a good analysis there from the Tax Foundation about what's exactly in this bill. And a lot of it, the bank statements. Again, everybody seems to be up in arms about the bank statements. As you know, I've been talking about this since May, and I'm glad that others have kind of heard the rally cry and started rallying against it. And when they say all people, well, they say it's $600. It's not a transaction of $600. It's the total amount that went through your bank account. Can there be a bank account in America that had less than $600 go through it in a year? I guess. I don't think that's the majority. I don't think that even there might be a small minority, small percentage that might have, and so that gives the partially false classification because it's not everyone. There's some people that it doesn't apply to, but virtually everyone is going to be covered under this act. And we'll have to discuss this when I get up these websites. That's what's problem when you have when you're on streaming live that you have some technical issues. So we had some technical issues. So, but let's talk. Again, we'll have to review this again tomorrow. Let's see if we can't. Now, again, if you're fighting the IRS, what you should do, first thing you got to do, and a lot of times you can fight the IRS yourself, but the first thing you should do, get a copy of my book, Deal with Your IRS Problems Today. You can go to freeirsbook.com and get a copy, freeirsbook.com and get a copy. So, and remember now, we're going to ask you to like and share, not share, right, Joe? Like and subscribe. You can share too if you like, but like and subscribe and to our content. It'd be very helpful. So thanks so much for joining us here today. Technical issues and all. And we'll see you again here tomorrow. So let's see if we can get the media up. There you go. So again, thank you so much, and we'll see you again tomorrow.